So, hello guys, welcome back to another lovely trading live stream. We're going to do some in-depth stock analysis, going to set our targets, as I needed to do this over the weekend anyway. Thought I'd live stream it so you can post in any comments if you want any stocks analysed as we go through, and you can also just see kind of what the weekend procedure is and what we look for, and kind of just what we do over the weekend so we can trade during the week quite easily without too much stress. Just to get straight into it, we will make this smaller and open up think or swim again. There we go. Leap down here, and sorry the camera is a bit more blurry than usual. I'm having to use a built-in laptop one as I'm streaming. Usually I use my camera to record, but can't do that. Now let me just quickly open up the chat so if anyone is looking for some stocks to be analysed, I can then see it, and then we are good to go. Okay, there we go. So I can see everything now. So yeah, really all we do is we have our normal watch list. So I do have quite a multiple over here, overall market ones, for example S&P 500, and just overall markets, because obviously when we're trading we want to know the overall market direction. So we have the alerts out. We will check the chart intraday, but we will also have the alerts out. So once it's coming into a standard deviation, we are notified, and that may provide some possible trades, or it may just mean, let's say if we're, you see the S&P 500 coming into this second deviation and we're looking at a few long bias trades, we may reduce the amount of long bias trades we're taking because we would expect a market pullback coming into this level. And then other indexes, these are mainly futures over here. So obviously natural gas, crude oil, all these kind of things. Just kind of see where they are. Again, most of these we have alerts out, and all we would really do on these kind of futures, where I don't touch them too often, is just have the alert out. I want to be notified if it's coming down to this second deviation. So again, we can throw out some alerts, and we're then looking for the same thing. We'll put some alerts upwards. Really, if it breaks above the statistical mean, or kind of to the statistical mean, then we want to be notified of it. We probably don't trade at this level, but we want to then know that it's on our radar. And again, the same thing, most of these I've already done it for, but that is kind of how we go over these indexes. Again, we don't tend to trade them all that often, but I do like to have them kind of alerted just so I can see what's moving. I mean, if lumber gets notified, we can see that. And that may also allow for other trades into other sectors. For example, obviously if lumber, like it was last year, was quite high, then we knew things like Home Depot and stuff like that may have good earnings or beat estimates, and that again may provide some trading opportunities. I have already done some of these. We did basically all the A's to the J's, so we just need to do the J's downwards. But again, if you want any of these that I have already done in my own time, or you just want to stock analyze, let me know, and we can get to it. But really all the procedure is over the weekend is come onto the chart. Usually what I will do is go over to my alerts, or market watch alert, and I will just go for here and usually just clear them all. And the reason for that is, especially right now, markets are quite volatile, which does mean that the standard deviation channels do move a bit more frequent than they used to. So by doing that, kind of coming in, wiping the alerts, and then setting new ones every week, we can get more close to accurate levels, and making sure that that we're getting alerted at the right times. So again, we come in, basically just do this. So if Johnson & Johnson falls, I want to be notified just before it comes into the second deviation on the daily, and I want to be notified just before it comes into the second deviation, the third deviation on the 4 hours. So we leave those there. And then really I want to be notified if Johnson & Johnson can kind of break back up to this $175 level. Again, probably won't trade it at that level, but I want to be notified so I can put it on my watch list again and reset deviations, both the up and down side, because really if Johnson & Johnson comes up to this 175, again I want to be notified, because if it comes back to this level and starts selling off, these lower deviation levels are going to have to be readjusted most likely. And again, if it starts going up and maybe pushing to the upper deviations, again I want to be notified. So that's why we tend to have the alerts on both the up and down sides. JP Morgan we've already done because it is a stock I look at quite regularly. But onto Nordstrom, again the same kind of thing. All we really need to do for the analysis is the standard deviation makes it very quick and easy. Just come in here, create alert, and I want to be notified as soon as Nordstrom comes up to $25.75, because that will take us very close to that first deviation. The only time I will make these alerts very close, for example, literally near enough pinpoint, let's say if the deviation in this case is 1982, occasionally I might put the alert at say 1985, and I would only do that if I know I'm not going to be able to get to the charts in the day, and I'm still looking to take some trades, because I know as soon as I get alerted that I'm happy to take the trade coming into that level. So that's another way you can kind of do it if you don't want to be on the charts all day. And that's why I kind of like this standard deviation channel strategy in general, because really you can come on the weekend, do about an hour's worth of charting, and that really is all you have to kind of do for the week. Then I can come in Monday to Friday, come in as markets open, see if any alerts go off. Usually there's one or two just from stocks that have gapped, especially during earnings seasons, and then I can check those, see if there's any stocks I want to get into. If so, then I obviously enter into them, or at least set out the orders to get into them. And then I will start doing other stuff. I mean, by then I'll go over my trades I'm already in, make sure they're all doing well, or if there's anything I need to manage. Usually check through the tickers I'm already in, because usually I'm not in too many at a time, usually no more than 5. So usually I just go over those 5 tickers, and then I can just check, make sure they're all kind of playing out as I kind of want to. If there's any being bad news, so then I'll usually go and check the fundamentals. If there's bad news or something, or good news, depending if I'm short or long bias on it, and it may go against me, then I usually close them out early. If I know I can get out of it for a smaller loss, or if it's already in profit, I can just close it out for a smaller profit, just to kind of lock in that profit if I'm not too sure where it's going to go, or if the fundamentals have changed and it may make the trade a bit weaker. Really, if you're in profit or you're at a small loss, it's usually better just to close them out, and I can go and find another trade that is better suited. So continuing just putting these alerts again, it's quite easy. All you really have to do is really just look at the standard deviations, check kind of where the current price is, deviation to the up and downside, and that's really it. Again, all the stocks that I have in my watch list, so again, if you're looking to do the same kind of thing, all the stocks I have in this main watch list, all the stocks I know are fundamentally good companies. So if they're ones that I'm looking at long bias, obviously I know they're going to do quite well, and even these kind of companies I feel comfortable shorting when they come into these second, third deviations. The main reason being, as they're large caps, they're fundamentally strong companies. You have quite a lot of people looking at it, strong investors, and it also does mean that they tend to actually move more in sync, because people are more likely to kind of lock in profits on these more high quality stocks when they're a bit overbought. So even if we're looking at it on a short bias way, it's good to know that the companies are overall fundamentally strong, just because they're more likely to kind of fall in price, which can kind of sound a bit counterintuitive, but it does seem to work. So again, just setting these alerts pretty easy, and we can get on doing that. But really, this week, or the week that's just gone, not too actually many alerts went off, even though it was earnings, obviously earnings this week. There were a lot more, even though they were large cap companies, they just weren't the strongest companies. I think you had like Peloton and all those kind of companies that report, which are not obviously the best to be trading all the time. But yeah, so we'll continue placing all these alerts. Are getting through these quite quick anyway, already down to M. So I don't imagine this will actually take all that long to kind of place all these alerts. So there we go. And sorry as well if you can hear the laptop fan. Obviously I do trade, well, the whole setup is ran off a laptop, and I've got HBO in, and for some reason you can't actually manually adjust the fans. So it does mean if they are being loud or anything, I can't actually manually adjust them, which is sometimes annoying, especially when you're just recording a video or something where I'm only going to be recording for 5 or 10 minutes at a time. And so it would be handy just to turn off those fans, because in 10 minutes it's probably not going to get too hot. So that is quite annoying with that laptop. However, as I'm now at the new setup, I could set up the PC then it's just a bit tedious having to keep switching. Obviously, I'm plugging the keyboard out of the laptop into the PC. It just seems quite a lot of effort. And the old PC I have here is pretty old. I think I bought it like 5 or so years ago, so I don't even know. Well, it will definitely be worse than the laptop, but I don't even know if it will be able to handle kind of like all these standard deviation channels and all that kind of stuff. So yeah, getting on to this. Could actually, Micron is looking like a good potential trade could be setting up, because this what I've noticed with this stock actually. If we go into a longer term time frame, actually that's probably going to be a bit too long, maybe a 3-year. This stock, it does tend to go into these choppy seasons before getting its strong breakouts, as you can see, kind of done this repeatedly. So that's one thing I'm actually looking at on Micron. Put the alerts a bit closer together because I actually want to be notified if it's kind of breaking up or down, because that could provide some actually good trading opportunities. We will put that at the 52-week low, because if it goes to that low, I do kind of want to be notified of it. Another one that's actually doing some good potential plays recently, especially, is NTLH, which is Norwegian Cruise Lines. As you can kind of see, just actually on this chart doesn't look like it's moving all that much, but I mean these moves it's creating, like even this move here, I mean these are like 10% moves, 13%, and then the next day it went up, you know, that same thing, 15%. But this stock does move quite strong, and it's something I have been paying attention to quite a lot recently. That and CCL, I know more people, I think CCL has a lot more volume. However, Norwegian I tend to prefer how it actually trades a bit more, so I tend to stick to Norwegian when trading the cruise lines. Also, we'll set this down at a 52-week low. But yeah, Norwegian, I mean, it's one of these stocks, if it comes back down near to the $10, definitely one we're trying to swing trade, because it, I mean, on that kind of thing, trade that with some bull spreads. 9 times out of 10 you're going to make money on those kind of trades. So it's one thing that I did. I think I did trade it actually even a few weeks back. Okay, there we go. Netflix, one of these stocks actually. I'm kind of glad I got out of it. Once it did its, I think it was this gap here. Ended up kind of buying into it, getting out and near break even, but it's just really not moving all that much lately. And to be honest, I imagine it will get even slower as time goes on, because we did just have Disney's earnings. Obviously, there were blowout earnings. Did see the stock increase quite a bit off it. Well, we can't actually do negative on this deviation. We'll just go to the 52 below. And that's one thing as well, actually, when we're looking at standard deviations. If you can't, like if the first deviation is negative, for example, you can't place a deviation there, we'll tend to just go to the 52-week low. So if it goes to that low, then we can have another look at the stock and see if there's anything we want to trade. And I did kind of forget now what I was saying. Oh yeah, Disney. Yeah, so with Disney, obviously they just had their blowout quarter, and so with that, a lot of their revenue, well actually a big of their loss is coming from Disney Plus, but it just shows that they're really trying to make Disney Plus succeed. And that will be a bad thing for Netflix, because if they kind of got they've got way more money to waste than say something like Netflix, so they can kind of keep running it at a loss, getting way better programs on it, and movies, and over time, as it kind of just kicks competition out of Netflix, and Disney Plus becomes the bigger platform, then they can start looking to make it a bit more profitable, which I think they're doing now. They're looking to add in or increase the price, and then also add in a cheaper subscription, which is ad supported, which I imagine actually a lot of people will go for, because in the US you don't really have that too much over here in the UK, but I know in the US you have like Hulu and stuff, which are all ad supported, and I think most people do actually kind of just use those ad supported ones, which I never understand too much, because it's like for the sake of an extra $3 or so you can get no ads. I think that's usually a lot kind of better for your time, but if makes the company money, it's definitely a thing to be looking out for. Paramount, actually, I haven't traded this stock in forever, but I do like leaving it on the watch list, because it does really after this massive short squeeze move it had, kind of always been on the watch list since then, but really its trades haven't been too well. So we had the breakout of this choppiness, or not even choppiness, just consolidation period, sold down, and we kind of created a new wider one, and we kind of just broken down from that. And as it looks like now, we're currently creating another consolidation period. So this is another thing to look at on stocks like Paramount. You can just easily go onto like a weekly chart, in this case a 3-year weekly chart, and you can actually start seeing these patterns very clearly. I mean, if you're on the daily, it's not all that clear, but going on to something like this, it's quite clear. And you can see where is it going to break out, and you can see where it's actually having its support. And that's on that first deviation. So really, if we can buy Paramount around 23.50, it's most likely going to be a good buying opportunity. I didn't actually mean to do that, but we can go back there. Can make that smaller as well. Actually, we're now having loading issues, which is a bit weird. Okay, there we go. I think if it's going to load, but yeah, I mean that's the kind of thing. Because yeah, if we go into the daily, yes, you can kind of see it's consolidating, but it's nowhere near as clear as being on that weekly chart. So that's really just one thing to note. Sometimes going onto those even wider time frames can just make a pattern that may not be all that super clear on a daily. It can turn it sometimes very clear. Pen. Again, these kind of stock I'm not actually a big fan of trading. As you can see, Penn Entertainment, it's just a very slow mover. Don't know if it's been like this for ages. I don't think it has. Yeah, like before it was doing strong volatility, but really now in this past year, I need to change it to 4 hour. It's just been very slow. I mean, we're not really getting all that much movement. Maybe this is moving a big amount in percentage. Yes, it's actually moving quite big in percentage terms, but it's just not one I've actually really been trading. I mean, if it can push up to this $43 area, then one we could look to potentially short. And I guess if it comes down to a 52-week low, maybe coming into a deviation that way. So we'll leave those on. Pepsi. Pepsi, again, one of these, another range-bound stock right now. I mean, you can see quite clearly, just looking at it like this, it is really stuck in this range, and we're kind of coming to the top of this range right now. So we could expect a sell-off, but really if I'm looking to short this stock, we're looking to go that bit higher. If we can kind of get to this 179.50, that would be our second deviation on the 4 hour. Obviously, so we'll be at the top of our manual resistance, and then we'll also be coming into our automated standard deviation resistance. So really 177 to 179.50, strong resistance, and again if we can kind of break to that level, definitely something I am going to look to short. And I also want to be notified as well if it obviously comes back down to the lower range of this or lower bound of this range. But these stocks, again, usually very easy to trade. Something I definitely like trading with bull or bear spreads, just because you can leave them in there. You know, it may consolidate on that resistance, or that may consolidate on the support line for, you know, a week or so at a time. But really, if you're then trading it through bull or bear spreads, it doesn't really tie up too much money, and you can wait a bit longer, because obviously you don't need to pull the capital out of the trade for one benefit, but then at the same time, obviously with the option, or playing it as a bear put or a bull put, a bull spread, you don't actually have to worry too much about time. Obviously, usually when you trade options, you've got to worry about the time decay, but as you're buying and selling an option at the same time, the time decay isn't all that bad, or doesn't really have an impact on the trade. FIRE is actually a stock we did analysis on yesterday. It's forming, it is kind of forming a bullish pennant as of now, or kind of just triangle formation, I guess. But I do think actually with Pfizer, I have more of a feeling it's going to break to the upside. The reason I say this is it's staying at these upper levels a lot longer than it's staying at these lower levels. Really, as soon as it comes down, buying pressure comes in, it bounces it straight up. So that does kind of indicate to me that once we kind of maybe one or two more taps onto this upper resistance, we could see a breakout to the upside, and that's something I'm paying more attention to. I deleted the levels, but they don't really matter. We got the alerts on. PG actually did trade this a few months back. I think around this level here. I think it was around the 130 level. It was posted in the Discord, I believe. Again, just playing those bull spreads. Just easy trades. Again, you don't really tie up too much money trading them. And you don't really have to worry. Again, usually I buy them out with like 180-day expiry. Once they're in the money by quite a decent amount, once I'm 70-80% of the way to max profit, just close them out, because then your win rate on them is really high. Your risk reward is usually near enough 1-to-1, and again, your trades really at that rate are probably only going to last a week to a month most of the time, or at least most of the ones I've picked recently have all been a week to a month. One thing I will note as well, if you are playing bull spreads and bear spreads, what I have noticed is playing them on ETFs, especially kind of the triple leverage ones, it doesn't actually work that well. Recently I did play it on KOLD. I'm quickly actually pull the chart up. So this is the Bloomberg ultra short natural gas triple leveraged ETF. And the way I traded this was actually buying around, I think it was when it was $11. I literally bought this candle or this candle here, and I traded it as a bull spread. But the problem was, well, firstly it took a while to get out of the trade, just because I guess the volatility isn't, the volume really isn't there. I mean, right now it's probably trading, 5 to 10 million shares a day. So obviously with options it's even less, but yeah, really we just struggled to kind of get out of this trade, and it also didn't really move in our direction, which was quite weird. We got in, let's say, around $12. By $16 we were really still just break even, which was quite strange to see. And so it's kind of turned me away from, if I'm trying to play things like KOD, I'm just going to try and play them with actual shares, or just buy a pure put or a pure call, because yeah, they're really doing it as a spread for some reason that just really didn't work. And I had that same problem, I think I did it on ARK Invest ETF maybe like a year back. I ran into that same kind of issue. So it's one thing I'm not going to be doing as much anymore, or really at all, is playing those spreads on ETFs, and definitely not the triple leverage ones, because yeah, for some reason they just don't tend to work. There must be something with the option pricing making them not very efficient, or maybe it's because so much volatility is already priced into them. Anyway, Plug is actually doing a nice move to this upside. Definitely something I can looking to short. You can really push to this 33 level, that will be lovely, getting a nice short there. And I think that's where, if we're looking to short this, as of right now, there's a lot of volatility in a lot of these stocks, whereas I can really be patient. Usually I would trade them at, say, the second deviation, or start building size at second deviation and building even more size at the third if it carried on going. As of right now, a lot of stocks are really pushing in directions, in one solid direction, which is making it a lot easier to kind of be patient, wait for these third deviations before entering into the trade. It just makes a win rate on them that more likely, and usually offers a better max profit. So yeah, from 33.50, I mean, if we can get to this level, definitely something I'm looking to short on Plug Power, probably through a bear spread, but we could also go in with some shares. We'll see. It is also starting to move at a bit of a divergence on the 4 hour. However, that has not yet shown on the daily, so do be careful if you're looking at divergences, depending on what time frame you are using. Peloton really looking needs to move quite a bit before I'm personally looking to trade it. If I'm looking at it short bias, I don't really want this first deviation. Bit more keen on the first deviation on the daily. Excuse me. So yeah, if it comes into that level, something we could be looking to short. To the downside, really, if it breaks the $8 level, something we could potentially look to play long on. But again, like the things like Plug, Peloton, yes, they are kind of large cap stocks, and so that's why they're in this watch list. But they're not obviously solid companies. They're not. Well, actually, PayPal's not all that great at the moment, but they're not a McDonald's. They're not a Meta. They're not a Disney or anything like that. So that is one thing. Yes, I have them in the watch list, but I don't tend to trade them more that long bias, or I don't tend to trade them long bias all that often. Those ones I do tend to pick a bit of a bias on, which is something I don't like usually doing, and definitely don't on large caps. I just pick a bias once it's at a deviation, but on something like Peloton Plug, I never really trade it long bias. I only ever trade it on a short bias way once it's on those upper deviations. PayPal, again, one of those stocks that's kind of really just died out recently. I mean, don't really see it moving all that often. Not really talked about all that often, and yeah, really its moves just aren't all that big anymore. Qualcomm, again, we'll just set up these alerts. I think we're nearly done with the alerts anyway, but that will make it quite easy. Again, we'll just get through all these, and then it means we're sorted for the weekend. And then coming into the week, our trading is quite easy. We just got to wait for the alerts. And then that's quite handy as well, because obviously I post the videos on here, so I don't have to spend too much time going through every single one of these stocks every day to kind of see which ones are maybe pushing towards the deviations. Do it once a week, get the deviation levels, and then it means I can spend more time during the actual day to make videos. For example, the biggest move is in the large cap watch list, and then the biggest small cap gappers, because I'm right now aiming to upload 4 analysis videos a day, and so that kind of gives me the time to do that as well. Rite Aid as well is one of these stocks we did actually analyse, I think yesterday and a few days before that. Something I'm definitely looking to trade as it can push kind of this $12 mark. Once it pushes into $12, definitely something I'm looking to short. Again, most likely through a bear spread. But yeah, coming into that level, something I'm definitely looking to short. Probably to about the $8 level, probably the $9 level. Just a quick short on it. Don't want to be in that one too long, because again, Rite Aid is a very volatile stock, at least right now. And it's one I prefer to actually be a bit more long bias on when it can come down to those lower levels. Pushing down. Ralph Lauren, depending how you say it or from where you're from. Not actually one I really trade. I think we've done one analysis video on it the whole time this channel has been here, but it's not one really that's that trader friendly, I guess. You don't really ever see people trading the Ralph Lauren stock. It's more just a lot more people. It's more like an investing kind of company, I guess. A bit like, I guess, Berkshire Hathaway. It's not tend to be one that you trade all that often, if ever. It tends to just be more of a focus on investing. So push that. SPMY, I think that's Signature Bank. All the banking stocks as well, you'll see they already have alerts on there. Reason for that is if I go over here, I do have a watch list of the banks I like paying attention to. So I don't. So I then to do those first. Again, I go through my smaller watch list, market indexes, then onto other indexes, banks, and then usually onto the all category. Charles Schwab should probably be in the bank. I will add it to the banking one. There we go. Okay, we'll set off some alerts. And again at 52-week lows, because its deviations is further below that. Shopify, yeah, we don't really have all that many more to go, so that's quite easy. Shouldn't be that long of a stream then, probably 45 minutes by the time we're done. And then today actually I'm going to try and have probably 2 videos up. Might do a setup tour, because I kind of just got that finished basically yesterday actually. I don't know if you can tell, but the one in the thumbnail was a black desk. We've switched to this one. Just a lot better build. Basically the old one was a standing desk, but I just found it quite wobbly. It was quite annoying. And so now I kind of upgraded to this one, made in Germany. Well, it's light, wider, it's 160 centimeters, but also longer, well, I guess width. or depth, I don't really know what you would consider it, but like this direction, now 75 centimeters, which is actually quite nice. I wasn't too sure how I'd feel about having it that much wider, because most desks everyone has are usually 60 centimeters, but I thought I'd try it out, and actually really prefer it. It's a nicer distance as well from the monitors, especially as I run two ultra wides, one's in front of me, and then also have the laptop screen where you're currently looking from. Don't actually use the laptop screen all that often. I tend to just use it if I'm using the laptop by itself. I tend to literally just have the screen off, because when I'm not recording, I can just close the lid and just use the ones in front of me. And plus, I don't really need any more screen space than two ultra wides. It's enough to really do anything I need. But yeah, really that extra 15 centimeters of screen being back is actually really nice. Because I noticed sometimes when I had the old 60 centimeter ones, sometimes it would just hurt your eyes a bit after you've been there for, let's say, if I've been trading for an hour or so. You definitely notice it, whereas now it's a lot easier on the eyes. So if you were looking for a desk, you weren't sure how long you wanted it, I would have to say I definitely recommend maybe getting that bit longer one to a 75 centimeter. I think they do 80 centimeters I've seen. Don't think there would be too much of a difference. I guess it just depends on how much space you have in the room. That might be quite nice as well. But yeah, the 60s, don't think I would ever go back to a 60 now that I've had this. It just, again, yeah, feels much more comfortable in the eyes. And yeah. Okay, TD Bank as well, that needs to be added to the banks. I don't think I've actually ever traded TD Bank as a stock, which is quite weird, even though I use our platform all the time. Actually, I guess it's been brought up by Charles Schwab, so actually I don't think I've ever traded Charles Schwab's either. Kind of just leave them in the watch list, but the thing, I guess, with the banking stocks in general is that they tend to all move together. So once a TD alert goes off, the Charles Schwab alert will go off. Same time JP Morgan, Goldman Sachs, all those alerts will be going off, and usually the main ones I'll be trading is JP Morgan, Goldman Sachs, and Citi. Tend to be the three main ones I end up trading. Not really too sure why. JPM usually just, well, it is kind of my favourite bank, so I guess that one is why I pick it. And then, yeah, I don't really know why I do the Goldman and the Citi. I guess they just move a bit better. I think they have a lot more volume than things like TD as well, so it can make the trade easier to get out, especially if I'm playing options, which is obviously quite important. T-Mobile, I haven't traded this actually. I don't think I've traded that at all this year. TPG, the private equity fund, is actually coming into this third deviation. Could be quite a nice trading opportunity. Only thing with this stock is it was a, well, not a super recent IPO, but did IPO in February, so we've only got about 7 months of data to go off. So these deviations, they will be quite solid now, but obviously not as strong as a chart that's had at least a year of data. But either way, if it comes into these levels, definitely be looking to trade. But I will also be quite cautious of this gap fill created around this level, so I'll kind of put an alert here, because if we do end up getting long, I want to be alert. If we end up getting short the stock, I want to be alerted of that gap fill, because it's probably an area we would look to get out, or at least reduced size. Tesla, we'll just throw around at 970. That's actually one of those stocks I haven't traded that all recently. I never used to trade it much anyway, but haven't really touched it at all, I think, this year. Tesla, a bit of a controversial opinion, but I just don't really like it. It's very overhyped. Don't think it should be worth what it is. So it's one of those companies where I trade on a very short-term basis, but it's not something I really feel comfortable holding, a few months at a time. Compared to something, let's say, like a JP Morgan, where if I'm swing trading there, I'm very happy to be holding that if I need to for, let's say 3 months. I believe in the fundamentals of the company. I like how it's run. Jamie Dimon runs the company great. So really trading something and holding something that long, doesn't seem like a massive risk to me, or doesn't make me feel comfortable. Whereas something like Tesla, I do quite like Elon Musk, but I don't think he's the best to have as a CEO in the sense of keeping a stock stable. I mean, he comes out with ridiculous stuff all the time, and if I was holding the stock and that could ruin my trade, it's just could be very annoying, I think, to deal with. I mean, the things he comes out with that can move the stock so crazy, could just ruin a trade on something that was, I mean, obviously nothing is really foreseeable in trading, but it's just like an added risk. Yes, it could go in your direction depending on what he says, but could easily go the other way. And I think it's just a risk that can be avoided. Why take it? I can go and trade something else with a CEO that won't, say crazy stuff about the company or make the stock move too often, and it can move on a more smoother technical or fundamental basis. And so that's usually why I stay away from Tesla. I mean, even if you go and check, I think the recap, I used to do like the end of day recaps. I don't know when I ended those, probably beginning of this year. I used to do those. I don't think I ever even really traded Tesla back then. Most of those trades were small caps back then. But even when we did trade the large caps, I don't think Tesla was ever one of them. Okay, let's get into it. And that is actually one thing that has changed quite a lot, is really just my overall trading strategy. I mean, go back a year or even just when this channel was created, I was a lot more focused on the small cap side of things, but I have kind of just pushed away from that. The main reason being finding shares available to short if you're using brokers like TD, IBKR. Firstly, getting shares available to short can sometimes be a big issue. And then even when you go to brokers where you can get short locates, it's just sometimes quite expensive for what you're paying for. I mean, especially if the trade doesn't work out, basically just 2 losses on 1. So kind of just something I do stay away from kind of now. And it was a lot more stressful to trade. I mean, you're just trading straight on technicals, and really you're just waiting for that stock to collapse once people start taking their money. And it was just kind of a stressful thing to be trading all the time. That's why we kind of pushed away from that kind of day trading in general, pushed over more to large caps, go over to large caps, more swing bias focus, and really then it means I can also trade a lot more with options, which is actually something I prefer. You can get that defined risk. I don't need to worry about the time, and again, don't need to lock up too much capital to take those trades. So that's one of the main focuses now, one of the big changes, I guess, on the channel, even though the overall strategy is somewhat the same. We're still using standard deviations, we're still really looking for the same things. It's just differently now how we execute, and to be honest, we're still doing about the same. Well, we are doing the same, near enough percent gains on the account. It's just how we're executing is different. I mean, some people are obviously going to prefer the day trading side of things, because then once you're done with the day, you trade 9:30 to set 11. You're then done for the day. You've got no risk to the market. So I guess you can sleep easy, some people think. But obviously, depending on how you swing trade, if you're shorting, for example, shares with no hedges, obviously that can be quite daunting. But really, the way I trade, defined risk options, and if I'm buying or if I'm trading shares, if I'm shorting, I've always got a hedge. And if I'm going long, it's fundamentally sound company, so I'm not as scared to kind of hold overnight. But usually, if it's a large size trade, we will have some sort of a hedge on anyway, to kind of just reduce that risk. Because again, we kind of just reduce stress. I mean, if trading you're trying to do forever, you don't want to be stressed doing it. So it's really one of the key things I guess I changed in my trading is moving from small caps to large caps, switching from day trading to swing trading, and then just switching the overall execution in general, even though the overall strategy has stayed the same. And that's one of those things, if you're currently a day trader, you're currently a swing trader, you're looking to kind of move, more likely than not, your strategy will most likely work moving on time frames, or depending on how if if you trade on a 1 minute chart, it might be hard to kind of move that to a swing trading perspective. But if you're using already daily charts or 4-hour charts, things like that, and you're swing trading, you're still probably going to be able to move that to a day trading strategy. And the same thing if you're doing that as a day trading strategy, you pretty likely be able to move that to a swing trading strategy. So it shouldn't be too bad. Okay, we have 2 stocks left to put alerts on for, and then we're done on that side. Put 105, and if we kind of break below this recent low created, we want to be notified on ExxonMobil. ExxonMobil actually did provide a lot of great trades recently. I think we took 2 or 3 spread trades on it in the last few months, and I think 1 pure share trade on it. All worked quite well. I think they were actually all short buys trades once we saw really oil. Actually, that's one thing I'll go over. You've got to put this final alerts on, and then I'll quickly show you one thing I was looking at when trading things like ExxonMobil, because again, high win rates, lowish risk, and depending on how you execute them, you can get some good risk to rewards. So if we go over to the crude oil futures, one thing that we really pay, or at least I've been paying attention to, is when oil kind of pushes to 120, it really does not hold there long, and so that's sorry. So that is one thing. If we're looking, for example, here, where oil hits 120. So all these zones here, 120 in oil or crude oil. Then if we go to ExxonMobil and look at that same kind of time frame, well, actually looks a bit different on this chart, obviously, well, a bit. But the first time we hit 120, obviously sold off, and that was one short we did take. And then again, we're not actually looking at the ExxonMobil chart, we're looking at the overall crude oil one. If I actually change this to crude oil, and I'll put them side by side, because it should make things actually a lot more clear. But yeah, so 120, that was here, as you can kind of see on both the charts. So coming into here, we're shorting the 120 in oil, even though on ExxonMobil we may not seem super extended. Did that, but obviously you can see we were trading at divergence when this happened. But then the second time, obviously we did break the high in ExxonMobil, but it didn't really stop, it just continued going, and this could have been a lot of wasted kind of potential profits if we shorted looking only at the ExxonMobil side of things. Whereas if we're going over to the crude oil futures, we see we didn't hit 120 until ExxonMobil was around this $100 mark. So really we saved ourselves from losing $7-8. Oh no, sorry, near enough $10, which is over 10% on a trade like on a stock like Exxon. So really just looking at the overall futures on stocks like Exxon, where they're related quite heavily to a future, or they're affected by the prices of the future. It's really can definitely increase trading, and it is also one way if you want to kind of trade futures, but you're a stock trader and you don't want to have an account for futures and an account for options, and you just want to keep it all simple, trade options only. You can basically trade these futures just through a underlying stock. I mean, obviously you can go to an ETF that literally will match the crude oil ones, but you can and will probably have more volume into trading a stock like Exxon, which is very closely linked to the underlying fund future. But anyway, that is, well, actually we can make this a bit bigger. This is going to be the end of the stream. So this again, what we do over the weekend, the stock, well, how we kind of set up our stock and our alerts ready for the weekend, or sorry, the week. So we don't really have to do too much during the week. We can get we can get kind of the hard work done when markets are closed. No stresses then. Markets open on Monday. We can get straight into it. If any alerts go off, we can go and look to trade those. If no alerts are really going off, it's a slow day in the market, we don't need to take a trade that day. That's one benefit as well of swing trading, or at least I like. Kind of swing trading over day trading is I don't feel forced to kind of make a trade all the time. If there's no alerts going off, I'm not going to force anything. It kind of just gives me more time then to kind of focus on the smaller caps, large caps that may potentially move but aren't near a deviation, so we can get some analysis video up on this channel. Anyway, I hope you enjoyed the stream. If you did, Don't forget to drop a like and subscribe. Go and check out the channel if you want to see any other videos. And that is it. Peace.